Hilton brings you new ways to stay, with experiences that let you capture the glory days. Introducing the Graduate Hotels. Each inspired by local college towns, these stays are always original and never boring. Get in touch with traditions all across the country and enjoy a stay that's a class above the rest. Book at Graduate Hotels with Hilton Honors Points at Hilton.com. It's a win-win. Hilton, for the stay.
Reality radio for a really great future. We're talking real money.
Oh, I'm so disappointed, Tom. I'm so disappointed.
To see me put my sunglasses away until next May? No? Okay.
No, it's not. It's sunny.
Oh, okay. Pardon me. Yeah, there you go.
Sun. Hello, everybody. I'm Don McDonald. I'll tell you why I'm disappointed in a minute. That's Tom Cock. This is Talking Real Money.
Maybe the shorts? Okay.
That's a frightening sight.
Sorry about that.
Do you realize it's like 68 degrees out there?
Finally, sweet relief. I'm so
The
happy.
heat is back for you. Is it?
Exactly.
Oh. Do you have a problem? Tom does. No. Do you have
this isn't that
different
long
problem?
of a show. Sorry.
We're not going to go into that.
Yeah.
Do you have a problem with investing or money? If you made some mistakes in your investment portfolio, I bet you have. And it's not fun to admit that we make mistakes. We like to avoid that if possible.
Bury them.
Bury those things. And we also don't like to admit that the people with whom we've been doing business are anything other than, wow, they're just
And if you're going to
nice
call
guys.
and say they're really nice and they're friends,
no, you should
wait till
go
late in the
ahead.
second hour.
No, go ahead and do that, and we'll
Because they're all
agree
really
with you.
nice.
We will agree. They're
All right,
all
yeah,
nice.
they are.
But more oft times than not times, these people are not doing what's best for you. And that is why we do what we do. We try to help you find the better ways to invest. And there are better ways. They're simpler, they're saner, they're in many cases much safer, they're less expensive. I don't know why most of us do the things we do with our
I'll tell
dough.
you why. Because we had a meeting this week with somebody that told us why. It's perfect. This is somebody who may work for us. And what did she say? She said she bought something a long time ago from somebody. You probably don't remember this. And why she did it, because it was a friend, and she never looks at the statement. She never made a change because that's the default. That's where my money is, and I just never got up in the morning and said, I got to fix this.
The default.
Yeah.
Shouldn't the default, though, be the very best you can possibly do based on the information that we have available to us as human beings?
Yes.
Yeah.
Okay.
I got an email this morning,
Yes.
and I'm disappointed. It's a group you and I know well.
Oh.
The American Association of Individual Investors.
We do indeed. We've spoken there many times.
I'm tempted to suggest they change the name of their organization to the American Anything for a Buck Association of Individual Investors.
Now, in fairness, I don't think the club makes anything.
No, the organization nationally. Now, I'm not talking about the local AAII.
Yeah, because we've spoken
I'm talking
there,
about AAII nationally. I got an email from them
What
today.
are they? And they're actually pitching something?
Yeah.
No.
And it really irks me. Ready?
They shouldn't be doing that, by the way, but go ahead.
Oh, they're trying to make a buck.
Okay.
Our 4 superstar investors have beat the market by nearly 57%. Please allow them to guide you to a worry-free retirement.
By the way, is worry-free having somebody beating the market?
No, that actually, and they're saying they're in this. I'm not going to read you the whole thing, but they're basically saying they're beating the market with less risk because they're such brilliant stock pickers. They're such brilliant stock pickers. And why just use 1 or 2 of the most brilliant?
Get the 4.
They're going to give you 60, actually.
60. Oh, well.
60 proven superstar stock pickers, and you can save money. It's only $150 a year.
And
How
then you
can
get
they
the
get away?
secrets.
This bothers me. I don't even know. We'll come back and talk more
Please
about
do.
this. We really should. I'm Don McDonald. That's Tom Cobb.
Tom and Don are talking real money.
Quick break. In addition to our Talking Real Money podcast, we have a few other tools to help you gain a better understanding of the concept of real investing. Of course, there's Real Investing Journal. That's offered in both a free online version and
in an inexpensive printed magazine. Explore both those options at realinvestingjournal.com, realinvestingjournal.com. Then we teach classes. We offer most of our live classes in the Seattle area because that's where most of our offices are, but most of you live elsewhere. That's why we're now offering the same classes that Tom and I taught at Retire Meet online right now, free at talkingrealmoney.com under the video link. Just go to talkingrealmoney.com and then click on the video link. You'll see them right there. Finally, we also manage the wealth or the budding wealth of hundreds of folks like you through our fee-only 100% fiduciary investment advisory firm, Vestory. You'll find our approach is consistent with the message we've been sharing for decades. We always put our clients' needs first. Our fees are among the lowest of any non-robo advisor, and constant education is one of our core values. Visit Vestory.com for more information on our firm and to take our free no-obligation risk quiz to better understand the level of investment volatility you can tolerate. That's Vestory.com, Vestory.com.
Your guides to a really great financial future. Tom and Don are talking real money.
Advertisements like this one just infuriate me because they imply that there is a secret, that there's a magical formula out there that allows regular investors to beat the market by substantial margins if only you had the secret. And the fact that they can post this stuff, if someone is a registered investment advisor, you can't say stuff like this without backing it up with tons and tons and tons of disclaimers and disclosures. Whereas this magazine, this newsletter, can do it with impunity, and it's coming from a group like AAII that I think has to work at a higher level, live up to a higher standard.
Because the people
They're
assume because it's not for profit
right.
company or not for profit organization, I should trust the information I'm receiving from them and when I go to their meetings.
And yet this thing, this solicitation sounds like all the crap you get from all the typical people out there. It's just garbage. It's unadulterated garbage, and there's no way that they could have vetted these numbers and come up with these actual numbers. For example, they're saying they use one of their superstars as John Neff's strategy. John Neff retired from Vanguard Windsor Fund back in 1995. He's 81 years old. Now, John Neff
Vanguard is the largest purveyor of mutual funds in the world. Windsor has been around for that's an actively managed fund that primarily owns large U.S. companies.
Large U.S. value.
Yeah, large value.
Large U.S. value.
And it's been around forever.
Yeah. I don't even.
So, by the way, when
did it start?
here's a starting point. When you compare the return of that to the S&P 500, that's not a fair comparison because the S&P is not a value portfolio. In other words, value companies are those that have been beaten down by investors. The accountants would expect the price to go up to meet what the company is worth if you took all the assets and added that number up. That's a value firm, generally.
Yeah, what's interesting is that their numbers, you can't independently verify those numbers.
No.
I cannot go out and say, John Neff's strategy did 299%
because you have to go back and
better.
look at every trade, every day, et cetera.
That information is not available to us.
Correct.
It's not available to anybody. So you can't verify their claim that his strategy, and they're saying his strategy, they're not actually saying John Neff, his strategy has beaten the S&P 500 over the past 15 years by 299%. What's interesting to note, though, is you would think that Vanguard would try to get someone pretty close to as good as John Neff to take over for him after John left, but I don't have the 15-year track record for John Neff to 95. I probably could get it, but I don't have it at my fingertips.
From 1980 to 1995. Okay.
Yeah, I could probably find it, but I just looked at their 15-year track record right now for Vanguard Windsor.
Going back to 2002?
Yeah. Vanguard Windsor has underperformed the S&P 500.
Which we would expect, by the way, because large growth companies have done better than value for a very long period of time.
Yeah, undervalued means undervalued assets. Growth companies means rising earnings, basically.
Okay, yeah, that's a good way to put it.
But for them to make these claims, and they're going to sell, because AAII has a lot of members, they're going to sell thousands and thousands of memberships at $149 a pop. And then they go on to say, and this stuff just makes me angry, and I want to share it with you. They go on, and I just skipped right past it. Why does this do so well, they say? Because of AAII. They basically even
Wait a minute,
throw that
they've
in.
done well because of AAII?
Yeah, I got to find that
Well,
line.
and by the way, if you're a member who's aware of this, we'd love to talk to you about this. You can call us. We'd love to chat about this great stock picking prowess. I mean, my issue with AAII overall is it's the idea of the month. The meetings are designed to bring in people that will tell you if your money is doing poorly over here, you need to move it to this strategy, and this is new, this is hot, and this is why you need to buy it. That's been my struggle in the very long term with AAII.
Here's the quote.
Yeah.
SSR, which is the Stock Superstar Report, that's their little abbreviation for it, has outperformed the market because only the American Association of Individual Investors has the resources to continually test a universe of over 6 stock investment strategies until we settle on a select group of just 4 significantly diverse superstar approaches with a proven track record during both bull and bear markets. This is something we were going to talk about anyway today. What is a proven track record of performance? What are you looking at when you look at this track record, Tom?
Well, I'm a little lost as
What
to
are you
the
looking
question.
at? What are you looking at? When you try to measure someone's performance, what are you looking at? You can only look at one thing: their past performance.
Yeah, we don't know what it'll do on Monday forward.
Right.
Yeah.
So you're looking back.
Yes.
Now, I can find dozens of studies that have shown that the best performing strategies of the past are often not the best performing strategies in the future.
Oh, we could show more than dozens. By the way. There's a whole lot.
I mean, one of them showed that one of them from Dimensional Fund showed, I believe it was 70% of the winners for the past 5 years were the losers or out of business in the next 5 years.
Oh, and by the way,
It was
if
a
you
huge
don't,
number.
and you can go look at mutual funds, the number of mutual funds that survive for 15 years it's less than half. I think it's because so many people have an idea, they try it, it does not work.
And they're implying, you see, the implication of that paragraph is that we're going to find the 4 managers who did really well in the past.
Yep.
And you should use them in the future. Why? Why does what they did in the past have any bearing on what they did in the future?
Well, okay, but take that one step further. What do you trust then?
You can't trust a track record.
Okay.
You cannot trust a
But
track record.
we trust a track record.
We
of
don't
the
trust
markets.
a track record.
Well, we use one.
We use it for illustrative purposes only, never to say you should expect this.
No, because you don't know what
They're
to expect.
kind of saying you can
Yeah.
expect this because these guys are so brilliant that they know things that no one else can know.
Well, and I think it's kind of silly for AAII to say they're the only people that could do this kind of analysis when there are probably thousands of firms doing this kind of every single day. Very large mutual fund. I mean, there's all kinds of people in this business that spend untold billions to find the best manager.
Yeah. And the thing I feel this is just another cheap.
It sounds exactly.
tawdry
It sounds exactly like the other ones in your inbox that you read all the time.
attempts to get you to give them your money. And
Yeah.
I think I got to tell you, AAII folks, I think that just absolutely stinks. And if any of you follow this, I think you're foolish. I really do believe you're foolish.
By the way, you said what? Because I kind of put you on the spot. What do we trust? I actually do, to some extent, trust widely diversified market behavior for a long period of time. I trust,
yeah, but that's not trusting someone.
That's completely.
To do
That's what I was
something.
getting to. That's completely different than saying Don McDonald's picked the best 10 stocks for the last 5 years. Hire him for the next 10.
And in the spirit of both humility and stupidity, and I'm going to expose all of my stupidity here for you, to all of you.
Not all
there
of it,
was a
by the
time.
way.
No, a little bit of it. There was a time when I actually thought if you did great research,
Yeah.
you could pick great stocks. I believed that. Interesting thing was
Should we lash you now or
I
later?
was proven wrong personally.
Okay.
And they go through and they say if Warren Buffett was handpicking your stocks, you'd make money. If Peter Lynch was picking your stocks, you'd make money. If Martin Zweig was picking your stocks, Ben Graham, dead. But, for example, even Peter Lynch. If you ask Peter Lynch today, hey, Peter, what system should I use to pick stocks? He would tell you there is no
Well, he'd tell you use
system.
an index mutual fund.
He's
That's the
actually-
system.
I've got that.
And by the way, Warren Buffett would say,
The same thing.
yeah, use an index fund because He knows. He's smart enough to know there was a lot of randomness in his picks. There was also the fact that if we really want to get into his track record, which the last 15 years has been beaten by large value companies in the U.S., but if you want to get into it, he's had certain advantages over most of a lot of money, for one thing, running companies.
Right.
I mean, it's kind of different than just being
Folks,
a passive investor.
Ladies,
So,
gentlemen, that's the difference.
It's horrible.
That's the difference. If by chance you'd like to see a scientific approach, learn a more scientific approach to investing, we are getting now into our class season again. We're doing the first lunch ed in ages because we just now got our new
I thought somebody had said we had class. Okay.
No, we're going to be creating classes for you.
Got it. Okay, yeah.
And our first lunch ed class is coming up in just like less than 2 weeks.
Yep.
August 23rd in our new education center.
Fantastic.
So it's a 1-hour class. You get lunch, so you can take a lunch break, come to the class, get a great education. I mean, great education. You're going to hear from Nobel Prize winners. Actually hear the words come from their mouths on what works. And you'll understand what we believe and why we believe that most of this garbage is just that garbage.
And what the academics believe. By the way, the new office at the intersection of 520 and 405, basically.
Really, you just get off of 405 at 520, pull over.
And you're right there. So, and then that's one day, and I'm doing a class with Rick Gregrick where I'll be talking about the same science of investing, how to create retirement income. That's on the 29th, I believe. We've got another one.
No, don't mention any others.
Oh, that's
they're
it.
not up
He's
there.
waving me off. That's
Those
it,
are the
folks.
only two.
Time's up.
If you're interested in attending those classes, go to talkingrealmoney.com.
Well, no, I was going to mention next Saturday,
click
but
on the
there's no class. But okay.
You mean the lunch thing?
Yeah, because
the
we
open
told
house.
people to go sign up, but
Don,
you would have had to have been really bright.
Don didn't publish the page.
You got
to
to actually put it on the internet for people to sign up. So for those of you who tried to go online to Talking Real Money and click on the thing right at the top that says future events and then said, well, there's no event, you idiots. Well, yeah, that was our fault. But now it's there. So if you'd like to join us next Saturday, live broadcast, food trucks, go see our new office, hang out with the vestry staff.
In case I was hallucinating, I should check and make sure it's actually
I hope
there.
it is.
So, yeah, we're about to have a nuclear war.
That's one.
Where we've got racial tension in
That's
Charlotte
two.
and whatever other cities. We've got a guy in the White House.
We've got number 4. We have had no rain for 60 days.
Right.
Yeah.
60 days and 60 nights.
The hottest temperatures on record 3 consecutive years. I mean, you could go through all the. There's
I
a
was
lot of
going
problems.
national and international. You can go local
Yeah,
with it
okay.
too. But what I guess the point is there's so much stuff. It seems like
Why do I care?
The world is coming to an end.
Yeah.
Now, I want you to remember something really, really important. Think back to one of the most disastrous days in our memory. Those of us who were alive. It wasn't Pearl Harbor because very few people who were at Pearl Harbor are still with us.
That's true.
In our lives as baby boomers, the big, big disastrous event was 9/11. That was when the United States was
I'm old
attacked.
enough to remember when John Kennedy was assassinated.
I
so
think that, but that
it
pales,
didn't mean
like,
anything to me
it's
because
not
I
an
was like
attack.
4 years
But
old.
plus,
Or whatever.
it wasn't
yeah.
an attack on America.
That's true.
We've had presidents assassinated in our history.
Mm-hmm.
We have a system to survive that, but we were attacked.
Yeah, 9/11.
And
That's
there
fair.
there was massive fear. So,
Well, and look what happened to the market.
well, that's the thing. The market went way down.
Yeah.
But I recall leading right up to the beginning of shock and awe in Iraq that everybody was, the minute the war started, they were sure that the market was going to plummet.
Yep.
The
Had
minute
to.
the war started. And literally the day the war started, the market went on a tear that did not end until 2008. It went practically straight up from the day
It was
we
a good
invaded
period
Iraq
of time. That's true.
until
Yeah.
2008.
Which was January
of 2001.
Yeah.
I
No, it would have been
2002.
yeah, something like that. Okay.
2002.
Yeah.
Straight up. So here's one of the things you have to remember. In fact, one of the best decades for the stock market in the United States was 45 through 55.
Yeah. Very, very
Right after the
big
war.
increase in equities. Yep.
And the economy of the world was demolished. As a matter of fact, stock prices started rising the minute we got involved in the war, even though millions were dying, tens of millions. So you must remember that the global economy, and that's the way we believe you should invest, with a global
How did
economic opinion.
AAII stock pickers do 45 to 55, though?
I don't even
I'm
think
kidding.
they were around
I'm
back
kidding.
then.
I'm kidding. We're
but
being-
stock pickers.
Stop it.
Stock pickers stink at what they do. I can say that with impunity because they don't have any academic studies, any scientific research that backs up an ability to predict the future. You just can't find it. Now, it's all anecdotal. When you give someone's track record, that's anecdotal. In the same way that when someone says, we believe you should not have stocks in your portfolio, right? Individual stocks.
We do, because they have inherent risk that we don't think you should take on.
Anybody ever heard of Washington Mutual?
Not anymore.
No, but you heard of them, right?
Yeah.
A lot of people had a lot of money invested in them.
WorldCom. I mean, you go
Delta
through a
Airlines
long
before they
list.
went out of
Yeah.
business.
And I think the bigger list is the fact that 50% of publicly traded companies have underperformed cash. That's the bigger one.
So here's the thing. We hear from people all the time. We tell them to sell stocks in their portfolio. We tell
Individual
you on the radio,
stocks, not to sell a stock portfolio.
So if
Correct.
you own Amazon, or if you own Microsoft, or you own Apple, or you own Boeing, or you own whatever it might be,
You bet.
in your portfolio, we're going to tell you, get it out of your portfolio. Maybe not all at once. You got to take taxes into consideration, but you get it out of there because the risk is too high for the reward. Yes, at times the reward can be significant, but here's the problem. Somebody says, my stock is making.
That's one. By the way, I think the bigger one is once you say my, then the trouble starts. Because if you work there, or if you've owned it, or you've got some sort of emotional connection to it, that generally leads to a bad decision as well.
But then the argument will be, but I work in the plant,
Right,
or
I know,
I work in the and I see that sales are through the roof right now. Again, the key, I'm trying to get to a point about a key word. My stock is up. My company's
And
sales
what they should be saying,
are
yeah,
are
what you're
up.
getting at here is everything should be past tense. My stock was up. Sales were up. We don't know what tomorrow holds with that company or companies, for
And
that
please,
matter.
I need you to think about that for a minute. Think about that. Is there any part of your life that you can say with absolute certainty, I know exactly what is going to happen tomorrow?
No.
You could say, I expect, but anyone here, anyone listening anywhere in the area, anyone listening around the country on the
Can
podcast,
say, here's absolutely what will happen
tomorrow.
tomorrow.
Do you ever remember being surprised that the day just didn't go like you thought it was going to go?
Not until about 8 hours ago or so. No. Yeah. Got it. So what you're saying is past performance is not indicative of future results.
And the problem is people hear that so often that they
it just
ignore
becomes
it.
part of it's the billboard
noise.
you drive by on the way to work that you've seen 1,000 times.
But
Got it.
one of the most, there are very few truths. And as a matter of fact, I'm going to do some features next week on truths.
You are. Truths
There
and
are a
lies.
very few truths about money, but there are some absolute truths. One of the absolute truths is that what has happened is not going to do a darn thing about what will, are not going to be indicative of anything that is going to happen.
And so when you tell us my stock has, or my stock is going up, or it's been a great year, we're still going to tell you we think you should sell that stock.
And,
because
and we're going to tell you that even if we personally think, yeah, it might still be a great year.
Indeed, because we still own it, but we just don't own very much of it.
Plus, we're smart enough to know that we're not smart enough to know.
The things you know you don't know can be very important.
Yeah, and we know. And if you're honest with yourself, you know the exact same thing. We know the future cannot be predicted.
Unless you've got the superstar stock pickers.
Or you regularly wear aluminum foil hats.
Or you read Black Edge and you're trading the market surreptitiously.
Oh, I'm trying to remember which book that was.
Which he'll be doing again in
Stephen
January
Cohen.
for the
Inside Baseball.
Yeah, sorry. It's true. Read the book. I mean, I can say that with impunity too, because if you read the book,
It was a
pretty
good book.
clear. Oh, it's a great book.
Well,
pretty clear that.
the guy paid a mammoth fine.
But he managed to stay in his house.
But
I guess
company
is the key part.
company pleaded guilty.
Yeah, but
The company pleaded guilty, but I didn't do anything.
wasn't me.
My company did, and I've admonished them. I've
I think
taken the
you
company out by the
you want to
woodshed.
read the bad people in that industry. I think it's about one chapter that talks about that healthcare stock where he got the phone call and then they did all the stuff, which he didn't tell anybody else in the office. I mean, you read that and you tell me he wasn't cheating. You have to see it.
And let me just add this. Stephen Cohen, probably in a one-on-one conversation with him, is the nicest guy you'd ever want to meet. You know, he's probably charming and just so convincing, just like Bernie Madoff was. Everybody who worked with Bernie Madoff personally loved Bernie Madoff. They wanted to.
Well, okay, because the office help was making $1 million a year. I'd love him too for that.
Well, but even the people that gave him money said he was such a nice guy. How could he do this? Folks, they're all nice guys.
Sorry.
We're nice guys, but we're not going to tell you we can do things that are magical. Give us a call on Saturdays from noon to 2 Pacific time or 3 to 5 Eastern time or whatever time it is in your time zone at 877-397-5666. It's funny, I'm going to be going to New Zealand next year.
I'm laughing. Yeah.
And to do the show live, I have to be on at 7 a.m. on Sunday.
The day before.
The day after.
I can't figure all that out.
I know. The date, it's very confusing. Well, I was going to tell you. I got a note from my wife during the break.
Yes.
In the last hour, we were talking about
bring lunch,
worrying about the future, about all of these events over which we actually have absolutely no control.
We'd like to think we did.
Yeah, but we have no control over what the idiot in North Korea does. We have no control over these riots in Charlottesville. We just don't have any control over these events, and they worry us. And we worry, what will this do to the stock market? And of course, the news media and all around
I'm going
us
to hide
are
when you
guilty
say that, but go ahead.
on a daily basis. I mean, I heard it last week when the market went down. Well, the market went down because of fears of North Korea.
Nobody knows that unless you have interview. I think it's a couple 100 million people who are trading, by the way. So
the market goes up and it goes down, and it doesn't do it for particularly logical reasons. And I'm going to give you an interesting example. I mentioned in the last hour 9/11 and all of the fear that followed that, and it was reasonable fear.
Yeah.
It was a frightening event, and the United States went to war in Iraq. We went in January of 2002.
I don't know that to be right, but I'll take your word for that. Okay.
I don't remember the exact date either, but I remember a lot of people calling my old national show and panicking. Should I get out of the stock market? Should I get out? I said, I don't know I have no idea what a war is going to do to the stock market. No clue. I probably would not have guessed that it would send it right straight up the next day. I don't think that would have been one of my guesses, but I didn't know what it would do. Debbie just sent me a note saying, she said, I remember she was a stockbroker still while I was on the radio saying stockbrokers were not particularly good to deal with. We had lots of interesting chats about that at home. She had a client whose son was in the Army and was at the front lines in Saudi Arabia, and he called his dad and said, Dad, I think we're going in tomorrow.
Now, you sure that's not Gulf 1 instead of Gulf 2? Because it sounds more like Gulf 2 because we were in Saudi. But anyway, I mean Gulf 1.
We were in Saudi in Gulf 2 too.
Okay.
Yeah, Gulf 1 was Kuwait.
But we started out anyway. We're not going to get
somewhere
history.
wherever it was.
Okay.
I don't know.
So somebody called and said,
and
"Guess
they
what?"
said the war is about to start.
Yeah.
And she sold all the stocks she owned
Oh yeah.
because she thought it was going to go down.
Market's going to go straight down. Sure.
And it went straight up, and it went straight up for 8 years almost.
That's when you get back in. That's the other
8
question.
years.
Yeah.
That's the other, and that's the question right now. We still talk to people who said, I got out after the market went down in 2008.
Yep. Waiting.
And I'm still waiting for it to go down again to get back in. What are you waiting for?
They don't ring a bell.
I honestly don't know what people are waiting for. There is no sign that it's time to get back in. You're not going to know. So if you don't know, then why not build a portfolio for not knowing?
The not know portfolio. It's incredible.
The know-nothing portfolio.
Like
the old know-nothing party
Yeah, exactly.
in the 1800s.
Oh, yeah.
We build the know-nothing portfolio. Because
I don't like the branding on that, but I'll let you go with it.
We don't know nothing about the future. That was bad English, but on purpose. We all want to get into retirement, not just comfortably, but really, we want to. There are things we want to do. I can't think of what the word is.
Well, actually, and more difficult than that in some ways is when you read these stories. One this week talking about how many people are working past 65.
Yeah.
In the old days, you got to 65, you got the watch, you got whatever, and
you got a pension,
sent on your way. And of course, pensions, fewer of them. People sometimes haven't saved enough, many times haven't saved enough. So it's out of economic necessity that the number of people working beyond 65 is growing.
Sometimes I think it's actually an understatement. The numbers I see show that the majority of the country has not saved enough to retire,
that's true.
even securely, much less very comfortably. And that's a real problem. And we run into a lot of people who are in their 50s, 60s,
Yep.
and you look at their portfolio and you go, well, you got to make some changes.
Well, and not just change it, but here's the thing I see more often than that, because some of you are listening and you think, I'm not going to call because I don't have very much money. Or some of you don't want it. People don't want to sort of say, okay, here I am today.
I messed up.
And so my advice to anybody who's sort of starting late is like going to the doctor. I don't feel well. Eventually, you got to say, I'm going to go find out what the diagnosis is. Same thing with your finances. People put it off. I'll do that next year. No, actually do it. Number two is oftentimes people start saving even though they have debt that they're paying double digits in interest rates on. That really doesn't make sense, because unless you've got the super stock pickers from AAII, you're unlikely to make double digits. That was my
No, I got
facetious.
that.
Sorry.
But you're right, and that's the mentality. Is I can invest and make more money than I'm paying on my debt. I'm telling you, unless you're paying 4% or less on your debt, there is no high degree of certainty that you're going to beat that kind of cost, and you need to do that. So,
well, and there's another one I see.
You need to prioritize.
Yeah, here's another
saying.
one I see, because people oftentimes don't pay attention to it. That is, they're working. They don't understand the retirement plan that they're working in, so oftentimes they don't even save up to the match that the employer provides. Every year Boeing provides the number. It's like $100 million a year that people leave on the table they never get. So at least get the free money from your employer.
In other words, that's money Boeing is willing to give away.
That's it.
They have it in an account that says, we earmark this to give to you guys,
but you got to
do something.
Yeah, and people, they don't do it. And I guess the other part is, goes back to where we started the show. Know how your money's invested. Know what you're paying. Know all those things, because many of you do not. Again, we met with somebody this week.
I want to
said,
go back
I don't know
and make
why.
that an even stronger term.
Okay.
I believe most of you, even if you claim you know what you have in your portfolio, I would be willing. I'll put money on the table that
How
you
much?
can't
I only have
answer.
$1.
You can't answer. I'd win on this in aggregate. That you can't answer a few simple questions like, how much do you have in stocks versus fixed income?
Oh, almost no. But there's been one person I ever met that knew that down to the percentage.
And
by
then
the way,
there's no chance you're going to know how much do I have in
By the
growth.
way, I don't think I know mine today either, because the markets fluctuate in the last 6 months.
Well, but you know
so
roughly
I
where
do.
it is.
Yes, true.
You know ballpark. You know,
That's
I'm not
true.
asking for the exact number.
Yeah.
I'm within 10%.
Okay.
Are you shooting for a 70-30 portfolio?
70% in stocks, 30% in
right,
bonds.
or a 30-70 portfolio.
Got it.
30% stocks.
Makes sense.
Most people don't know that.
No, they
don't
don't.
know if they have anything. In fact, I'd be willing to bet most people don't have any money consciously invested in international stocks. Notice I say consciously because they might accidentally have some in a mutual
They wouldn't go
fund.
out and try to do it.
No.
It's too risky. I don't trust those other countries.
And yet, that same person who says buying a broadly diversified portfolio of international stocks is too risky will have 25% of their portfolio in their company stock.
But they know that company. I know the CEO. Sales are going up. The future is bright.
All but the upper level management of any of those companies, I doubt, knows the
Really
CEO.
knows, yeah.
They may have seen them once in a meeting in a giant
Yeah.
auditorium.
Or saw them on TV or something. Sure.
Okay, and then I know Jeff Bezos.
You very well.
I know Bill Gates. I know these guys. I know Tim Cook.
Yeah, true.
I watch his keynotes. I know him.
There you go.
And by the way, I think Apple is going to do well. Do I own any of their stock? No. Well, I do.
Wait a minute. You own Apple.
Everybody, but okay.
Not everybody.
Everybody should own some Apple.
If you own the S&P 500, you own a lot of Apple. Yeah. So
But what am I trying to say?
I'm trying to get to the point here.
Well, the point. There's a point.
It makes it more interesting for the listener,
You
by the
got to
way.
start by knowing. That's the first step. You need to figure out where you are
When
before you can get to where you need to be.
They either don't do it because, as we
They're
said,
afraid to know.
well, they're afraid to know, or the default is I trust my guy who's been my guy for a long time, or I don't really want to know because it's going to be painful.
And we mean my guy in a generic guys and
Pardon me,
guys
my
and gals.
person. I
Yeah,
stand
kind of,
corrected. Yeah, I didn't mean that.
see.
Not gender-based, my financial person.
In Seattle, I'm trying
All
to
right.
take care
Well,
of you.
And I appreciate
Trying
it.
to protect you a little bit. But you can, I guess the point is, you're 55 years old. You've got less than $100,000
Yep.
saved for retirement. I'm using you as an example. You know who you are. You still can get to where you need to be.
Oh, definitely.
That's the thing. Is people think, oh, it's hopeless
No,
now.
I'm not going to bother. I'll
I'm not
work.
gonna bother.
Or they tell us, I'll work till I die. which you might not, because a lot of you may face a disability. A lot of you may be in a workplace where they might say, we love you, but
You're not
you can't
firing on all cylinders
you
anymore.
can't quite get the job. I'm not pointing fingers here either, by the way.
Like if I was working in a warehouse,
You
I'd
move
be
one
retired
package
by
from there
now.
to there. Exactly.
I'd be carrying like the 8-ounce packages. I can get that one over there.
We have for the lifting in our office, the mutual funds. We have young people for that lift and
Lift
carry the
mutual
funds.
funds?
Oh yeah, the young guys,
And the new mugs.
young gals.
The new mugs too.
Oh, the mugs are amazing. I love the
For
mugs.
our big event next week.
Not our mugs, the mugs that you hold
The new
coffee
vestry
in.
mugs,
Yeah, they're really good. I extremely enthusiastic about that.
And there are new T-shirts to match
They're
the new
T-shirts,
mugs.
they're mugs.
And I wanted to let people know that if you come to the open house next
This
week,
is the last time we're going to talk about it because it's a week from today.
If you come to the open house next week at our new offices, we're going to have drawings for shirts and mugs for everybody attending.
So we're going to ask like a question?
We're going to do that. We're going to do
Okay.
it for callers too.
Oh, okay.
So callers will be able to participate to
Wow.
win prizes.
Okay, but
It's
it's
our
more fun to
first
come
win
because
prizing-
well,
win
because we've got
prizing?
win prize. I would say something, but I'm not. So, but it's going to be a big day. We've got food trucks there. You get to see the new office. It's going to be fun.
This is a tough question for you. See if you can guess it. What is my least favorite financial publication? And I'll use the word publication
Wow.
loosely because it applies to websites, and my least favorite mainstream money media source.
This is not rehearsed, obviously.
No, this is not rehearsed.
Wow.
Who do you think?
Because I was going to say like Barron's or something, but
No,
you
they're-
don't really care.
yeah.
And I was going to say maybe Money Magazine, but you don't really read
No,
Money
I don't really
Magazine,
read
so
it.
you
No,
don't see
no,
that.
No. What's the one? They have they have some writers who just
Market Watch.
rub
All
me
right,
the
there you
wrong
go.
way.
Yeah, okay.
The headline.
I don't know if anybody's reading that anymore, by the way. You might be giving them a great promotion here. So
I kind of hope not, because the headline. This is the headline. This is the news headline.
yes.
Tell me
the
if there is
grabber.
tell me if there's any bias in this. Is there any bias in this headline in their perspective? North Korea may not be the biggest worry for this ailing stock market.
Wow. That
Where
pretty
did
much
they get ailing from?
yeah, because it went down by 1% last week. That's why the major indexes had a bad week.
And this guy, here we go. Here's another one. This is their lead story.
Yeah, of course it is.
6 reasons why this sell-off is just getting started. When did it start?
It started Wednesday.
But it went back up Thursday.
Guess
Friday.
actually Thursday. Yeah, Friday
yeah,
recovered.
Friday it went back up.
I think we had 4 down days in a row.
Oh,
That's why. So that makes a trend.
Okay. Here's
And-
his. I love this. You can have fun with some of these. All right. First one. August is the cruelest month, but September and October aren't great either.
Now, I didn't know T.S. Eliot was a great stock picker or market timer, but okay, good to hear.
Because something has happened in the past, there is this natural assumption.
Well, the whole notion that you sell in May and go away, right? I mean,
Yeah.
you wait the summer out because nobody's trading in the summer. Nobody cares. We're off at the beach, and we'll see you in September.
Right. His second one, and he's trying to be so cute with
Well,
his
yeah,
little,
like August is the
Yeah.
cruelest month.
hello is margin. Do you know what that one means?
I do not.
That was a good one, isn't it? He's talking about margin debt.
Oh, is Marge?
That
Okay.
people are
yeah.
borrowing a lot of money to buy stocks, and that could cause the market to fall. Now, again, let's put that in perspective. The margin debt in the market over the past 30 years has been a fraction of what it's been in the past.
Yeah.
The crash of 1929,
Oh.
when that happened, 90% of the money on Wall Street
Was borrowed.
borrowed
Yeah,
money.
right, yeah.
It's nowhere near that. It's
People
in
are
the-
jumping out of reasons for good reason, or jumping out of windows for good reason.
It's
yeah.
sometimes in the single digits or the low double digits, but it's not 90%. And then I don't even get where he comes up with one of this stuff. He says that market internals are crumbling because there are divergences.
Wait, not everything's going up and down exactly together? Is that what he's trying to say?
Yeah,
Okay.
because if most stocks or groups are moving higher as narrower indexes like the S&P 500 march ahead, there's no divergence. But when a narrow index, they're calling the S&P 500 a narrow index.
Yes, very narrow.
The
500
S&P
stocks.
The Dow is narrow. When a narrow index continues higher with few stocks participating, that's not good. How does he know this? then
this is the big
this
story.
This is the big
Yeah.
story. This is the big
This
story.
is what we call.
And then, wait,
Yes.
I have the best.
Okay, we're going to keep that.
Oh my gosh, this one you will never believe that he actually uses this for an argument that stocks are going to go down. This is the dumbest thing I have ever read in a column. I'm telling you, I've read some dumb stuff. We're going to share that with you in a bit.
Tom and Don are talking real money.
We hope you're enjoying one of the more unique podcasts out there, but we want to remind you that there are other tools we offer to help you get educated about what we call real investing. We publish Real Investing Journal both as a free online version and in an inexpensive printed magazine. You can check those out at realinvestingjournal.com. Then we offer classes, most of which are in the Seattle area, but now we've got a couple of the classes that we taught at Retire Meet online for free at talkingrealmoney.com under the video link. Just go to talkingrealmoney.com, click on the video link. And finally, we rarely mention it, but we also manage wealth for hundreds of folks and well over $250,000 through our fee-only 100% fiduciary investment advisory firm, Vestory. We manage money just as we talk about it. We always put our clients first. Our fees are low, and we educate you on a regular basis. Go to Vestory.com to learn more, and you can take our free no-obligation risk quiz to understand the level of investment volatility you can tolerate. That's Vestory.com, Vestory.com.
Reality radio for a really great future. We're talking real money.
One of my least favorite publications is one called
It's not really a
Market
publication.
It's an online
website.
publication.
Yeah,
It's,
okay.
It's still published.
I guess.
The line.
You don't have to have paper.
There's no
That's
paper,
true.
but you can
All right.
still publish. The lead article this morning was by a guy named Michael Brush, who they call a columnist. Michael said that the stock market is ailing, and there are 6 reasons why the sell-off is just getting started. At the beginning of his article, this just tells you. It's not my
Go
glasses
easy on
off
those,
my
yeah.
face. This just tells you how bad the article might be. He quotes Doug Ramsey, who's the chief investment officer of the Leutold Group, as saying, I think this is a correction that's not over. One, I didn't even know we had a correction.
So correction, technically, I believe, is a decline of 10% from a previous
Have we
high.
had that yet?
No. We have not.
Okay. So the correction literally hasn't started. It's not only not over, it's never started. But I just want a little aside about the Leutold Group. They've been around
Yes,
for a long time.
Yeah, they have.
Long
Yeah.
time. The Leutold Group in 1976 put out a poster that they distributed to every brokerage firm in America. Very famous poster. Jack Bogle from Vanguard knows all about this poster. The poster said, help stamp out index funds. Index funds are un-American.
Yes, it's very. I think I saw a picture of it. Maybe you had the picture of it.
I did.
That's
in,
right.
In
Okay.
our presentation.
That's right. Yeah.
Yeah. These guys are. I don't know if idiots is fair, but they've been on the wrong side of history apparently over and over and over again. But anyway. So he goes through all these reasons
Yes,
why.
and
6
why-
reasons.
give
He's
us-
stretching to find 6
You think?
reasons when he gets to this one. Ready? His title for this is Unlucky 7.
Okay.
I'm ready? This is weird. Over the past 100 years, during years ending in 7, the market has almost always been a train wreck during the late summer and fall, points out Ramsey at the Leutold Group. This is the guy who said index funds no one's ever going to buy those. They're un-American.
Because they're low cost.
He
and
said,
they're-
we wouldn't vacate the stock market based on this pattern alone, but at the very least, it's a sign you should be more cautious. What, is it a sign from God?
Well, you should. And by
Is
the way,
it
with
in your-
stocks,
is
you
it
should
in your-
always be cautious. They're risky.
But yeah, when the sun enters Aquarius, you should probably be. I just made that up. I have no idea. I don't even know if the sun enters Aquarius.
Don't read the column and don't go to that website.
But this just tells you how stupid people are.
Well, we got an email from somebody who's pretty smart.
Oh, cool.
Because you had earlier
email.
said there's nobody that
No,
knows
the
what's
future.
going to happen.
No,
Yeah, nobody
no,
knows.
no.
Well, it turns out Ray from Tacoma, he got a pretty good handle on this.
All right, Ray.
Yeah.
What?
He says, by the way, the subject line is always a great show. So thank you for writing us, Ray, and thank you
At
for
least
saying
somebody
that.
thinks so.
Yeah. He says he can predict the future.
Yeah, go ahead, Ray.
He predicts on August 12th, which I believe is tomorrow, the sun will rise and set.
Wait, but
It might not.
I was going to say the sun could blow up tonight.
I hope it doesn't, but
we wouldn't
that's
know it
true.
until it came around tomorrow. Didn't show up.
He also says he can predict the market will be closed.
Yes,
Because it's a Sunday.
he is 100% right
Yeah.
about that.
And he says he'll predict people will be buying and selling on August 13th, which is Monday.
Again, as long as the sun rises.
And he says he predicts people will still not take our, as he puts it, great advice, and will still panic and buy high and sell low, and he listens every Saturday. So there you go.
Well, okay, I
few things of
give him
certainty.
a very high score on
Yeah.
the market won't be open tomorrow.
Good.
That's a great prediction.
Yep.
And on the last one that people won't listen.
No,
a lot of people won't listen.
But more and more are.
I know, but
the
still
numbers,
a lot won't, and they know they deep down inside, way down deep, they know what we're saying is right.
Deep inside, you know he's right, like that? Yeah? Okay.
Yeah.
That's okay. Some do and some don't because they've got a friend or they've got somebody they like that tells them,
But
don't settle
then,
for
there's
index funds.
There's a nagging little voice in their
Okay.
head going, Can
And
they
so,
really
and when you're
predict the
feeling
future?
sorry for yourself, remember that really when we started with this message over 20 years ago, it was about 1 out of every $25 with stocks was invested this way.
Right.
Today, depending on which number you believe, it's about 1 out of every 3.
About a third.
Yeah, and the numbers the last decade, there have been billions of dollars moving out of what we call actively managed stock picking strategies into indexes, despite what the poster told you. So the trend, if you're doing it this way, is your friend.
You mean the Lutold Group was wrong?
They're still. I didn't know they were even still around.
Oh, yeah. They're out there still trying to predict the future
Yeah.
and doing it really badly. I mean, come on. To come out in print and say this correction is not over when it hasn't even started?
Tom and Don are talking real money.
Quick break. In addition to our Talking Real Money podcast, we have a few other tools to help you gain a better understanding of the concept of real investing. Of course, there's Real Investing Journal. That's offered in both a free online version and in an inexpensive printed magazine. Explore both those options at realinvestingjournal.com, realinvestingjournal.com. Then we teach classes. We offer most of our live classes in the Seattle area because that's where most of our offices are, but most of you live elsewhere. That's why we're now offering the same classes that Tom and I taught at Retire Meet online right now, free at talkingrealmoney.com under the video link. Just go to talkingrealmoney.com and then click on the video link. You'll see them right there. Finally, we also manage the wealth or the budding wealth of hundreds of folks like you through our fee-only 100% fiduciary investment advisory firm, Vestory. You'll find our approach is consistent with the message we've been sharing for decades. We always put our clients' needs first. Our fees are among the lowest of any non-robo advisor, and constant education is one of our core values. Visit Vestory.com for more information on our firm and to take our free no-obligation risk quiz to better understand the level of investment volatility you can tolerate. That's Vestory.com, Vestory.com.
Your guides to a really great financial future. Tom and Don are talking real money.
Now, you mentioned earlier, you're talking about my least favorite financial publications. And
I'm glad I remembered that. So
you mentioned Money Magazine because
Yeah.
it has some good stuff once in a
It
while.
does,
And
yeah.
it's funny you should mention that because it does. There was one article that I thought was kind of interesting
and that's
recently.
usually the ratio. It's usually 1
Yeah.
out of the 20
It's
or
an
30.
article called "The 19 Secrets Your Millionaire Neighbor Won't Tell You." The millionaire next door kind of thing.
Yeah.
And the funny thing is that a lot of us now have millionaire next door neighbors.
Yeah.
Because it's not that million ain't what it used to be.
I find it fascinating. If you ask people, they think $1 million's a lot of money, but they thought $1 million was a lot of money in 1965.
Right.
And it's not quite,
Yeah,
as you said,
well,
was worth
it's-
as much.
But maybe they're a couple of millionaire now. Yeah. Which
Makes
still
more
makes
sense.
you modest.
Yeah.
Of modest means. But they had some very interesting things, and some of them were so pedestrian. I'm not even going to mention them about paying off debt and all of that. Financial freedom is a state of
There's
mind.
another show you can listen to for that.
But,
Not on this channel.
But I love this. Your millionaire neighbor next door understands that money is like a toddler. It is incapable of managing itself. You cannot expect your money to grow and mature as it should without some form of credible money management. Now, that said it very well.
Yeah, right.
People sit around and just go, my money will manage. They'll
It's
take care
okay,
of it.
yeah.
I'm just going to leave it alone.
And you
It'll
don't
be
do that
fine."
with your 9-month-old.
No.
Yeah.
No, so it's
2-year-old.
like a toddler. You need to have some help, and the help you get should be help based on some sort of solid academic.
That's where the trouble gets into
Right.
because everybody needs help, but where do you get the help? And is it help?
And I love sharing this number with you. According to MarketWatch, that other publication, they actually did a little study. It was simple math. They looked at all the people who were licensed financial advisors, registered reps, people who sold insurance investments, and registered investment advisors. They looked at all of those, and they determined how many were strictly registered investment advisors. They didn't do
They have
any
a
product sales.
legal requirement to put your interests ahead of their own.
Of all of those people, and there are tons of them who claim, I am looking out for your best interest. You'll see it on their websites. We're a fiduciary. Of
Sometimes.
those 1.1 million financial advisors in America, 1.1 million, only 11,000 or 1% are always required to act in your best interest. Those are the people you need.
Nobody understands that. Very few people.
It's really easy.
It's-
Let's do it again.
Yeah, okay.
Okay?
No, not the number. Very few people understand.
What fiduciary means. Fiduciary is a weird word.
It is.
But it really means just doing what's best for you, not them.
But no, most people believe that their financial advisor is doing that.
But they're wrong.
Yeah. Well, because it's become a marketing thing. You tell people we're fiduciary. Well,
But-
at this moment, tomorrow we might not be.
They're wrong. A
Yeah.
friend of mine sent me a note last week saying, I'm talking to an investment person. What question should I ask? And I went, oh, I know. So I said, go to Talking Real Money.
Get the form.
Download the investment advisor interview form, and on there it says specifically, are you always required to act in my best interest? You may go to the website of one of these hacks on the radio on some of these other stations, and they are utter hacks. And go to their website and it says, we're a fiduciary. No. Because I have gone into every one of their websites, and only, if I remember correctly, out of all of the shows in the Seattle area, I may be wrong by one or two, but not including us, because we are always required to act as a fiduciary with our clients. There was only one other that was always required to act as a fiduciary.
24/7.
24/7.
Yeah.
The rest of them could be a fiduciary in 1 minute and not the next. And as a matter of fact, if you come to one of my upcoming classes, I do now officially have the fiduciary, non-fiduciary hats that I'm going to debut for the very first time.
I saw them.
You're going to be able to.
Which one do I get to wear?
I'm going to put them online so that you can order them.
Oh, I didn't know you're doing that.
I am. I'm going to put them online so you can order them
Wow.
and take them into your broker, your investment person, and say, just for clarity, when you're acting as a fiduciary, would you put on the green hat? And when you're selling me some garbage, would you put on the red hat?
Are these going to be a major source of revenue in the second half of this year?
I'm thinking not.
Okay. I was hoping.
But if I sold 2, I'd be doing cartwheels.
So are you giving some away next Saturday?
I only have 2.
Oh, okay.
No, I'm keeping those for classes.
All right, I see.
It's
Wear
a-
it sometime.
It's a visual
We
aid.
laugh about it, but the reality
It's
is
serious.
it is because it ends up costing people a lot of money. A lot of you listening today.
Well,
by
and
the way.
I was going to give the example. Here's a great example of the difference between a fiduciary advisor and a non-fiduciary advisor. It's a really simple example. You have 2 hypothetical funds. These 2 funds own the exact same portfolio of stocks. They bought the exact same portfolio at the same time. They trade them. They copy each other. They do
Yep.
the exact same thing all the time. I don't know that. There might be S&P 500 funds that do that, but they do the exact same thing. Well, there are S&P 500
they
funds
are.
that
If
do
they
that.
have to follow the index, they follow the index.
One of the funds has a 5% upfront commission
Yep.
and annual fees of 1% per year. The other fund has a 0% upfront commission, no rear-end commission, and fees of 0.25 point per year.
Which those situations exist.
If you are a fiduciary advisor, you are required by law to show both funds to the client.
Yep.
Or only the one that's in their best interest. A non-fiduciary advisor, a suitability advisor, is not required to show you the cheaper fund. They're not even required to let you know that such a thing exists in the marketplace.
And if you aren't somebody who pays attention to the industry, probably
Which
don't
is
know.
the bulk of you.
Yeah, you don't know. So yeah, it's sad.
That's how you that's the, for those who don't understand the whole concept of fiduciary, that's what it is. Are they required to do what's best for you? And we have 1.5 minutes to get Bob in, our one caller
Bob,
for the
go.
hour. Bob, we have 1.5 minutes. Hurry.
Hey, well, you guys scared the heck out of me a couple weeks ago. You had a parting comment saying that don't buy a house unless you absolutely have to. You got a family, yada, yada, yada. Well, I'm in the Seattle King County market, and I'm looking at buying because I love Seattle, want to stay here, want to grow roots.
That's the reason.
No, that's the right reason.
Okay.
It's
No,
a
no.
lifestyle decision.
Yeah, we said it was a lifestyle decision. Buy a house because you want a house, you want to own it, you want to stay there for a long time, you want to invest in it. They are not good investments, particularly condos.
Well, they're
condos
not.
have
There's
been
other
terrible investments.
There are places. There's things you could have invested in that would have made you more.
No, condos generally speaking.
I'm speaking real estate in general.
No, yeah, but if you talk about condos.
Oh yeah, let's not go there.
We don't want to talk about your
and
condo.
I'm really
do we?
not looking at this as, I'm not looking at it really as an investment. I don't want to lose money, obviously,
Right.
but the condo, I want to stay close to the city.
Yep.
I live in West Seattle right now, North Admiral, where, $600,000 gets you a shanty, where I can buy a brand new condo in South Park, for example,
Yep.
and I can get in that brand new for $467 with a VA loan. I'm looking to grow roots, be close
Bob,
to the city.
that is the best. That is the best reason to buy a house. That is the one reason that I think is totally sensible. It's a lifestyle reason, but don't buy them as an investment, and you're not. So good luck. Enjoy the new place.
Tom and Don are talking real money.
And all of that scientific stuff that we talked about, we share with you in classes that we do on a pretty regular basis. And we've got a couple coming up. We've got a Lunch Ed, which is a 1-hour class. It's a quick study on the science of retirement investing. That's coming up on the 23rd of August. And then on the 29th, Tom is doing an event with Rick Gregorick, an attorney, on saving for retirement, building a portfolio, and avoiding all those problems in retirement. You can sign up for all this, plus our open house next week, which is going to be awesome. Check it out at TalkingRealMoney.com, TalkingRealMoney.com.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That's a wrap.